Good morning, everyone, and welcome to the European crossover webinar. And we are seeing indices rebound a bit. You can see here with the SPOOs and also with Nasdaq. We rallied with the US market post the FOMC, and but we came up short, to close above here, which is a 50-day moving average. But you can see in the Asian market, we continue to move higher. So we've actually come up here to the 50%. And this is a key area here, this 15,265. Remember also pointing this out here in the ahead of the FOMC. This is a key area here. Also, when you're looking at volume, so interesting to see if we can push beyond that. Of course, like I said, we'll see what things play out right now. I don't have any positions on, but I'm definitely going to be interested to see where we're at right now. But of course, U.S. market's not open right now. I mean, as far as the cash, so we'll have to see how they play themselves out. But this is a key area here. I think, this is my 217 was a value area, with 265 being the stretch. And I think if we push beyond that, I'd have to check. I have to pull it up. But because my thoughts were, this was a good area to step in initially on the U.S. markets after the FOMC. If they had squeezed up here and to maybe take the other side, and I thought, okay, you're going to be wrong, or you could see it squeeze up here to 326. And we may just go and see that then, now that we've come through with the close of the U.S. markets, cash markets, and then for us to continue to extend here. Now, this is be an area where they'll probably take a pause, though. You can see there's a key little move there, 265. And the 50% back. But like I said, could they squeeze higher? And that's what I was thinking. I go, if they wanted to, we could still, if we come to the U.S. session, actually make a squeeze if the market were to stay bullish up here to 365. If you look at the VWAP off of the highs, actually comes in right around there too. If we were to extend right here, it's 326, but this is the key area right there. I think I marked it on the 2 hour. I updated this to reflect on this. This would be a key area. You can see where that would take us. That would actually take us to the broken trend line. So we'll see how this thing plays out, and why quite often I like to wait until the U.S. Open to go in and trade, because you have better liquidity. Had this pushed even further, but this is a good area where we could see a little bit of a pause. And I guess we're starting to see that here, right there. Talked about that. And that 265 almost looks like a pivot. So we'll see how things play out. But just wanted to point that out. Looking at the news, we did have PMI out of the euro area. Actually, we did have PMIs actually for this. We had business confidence out of France, came in at 106, a little bit low. The previous was 110. And then French PMI came in at 55, also a little bit weaker. German PMI came in at 55.3. Previous was 60. So all these European ones are kind of weaker. And the Eurozone's PMI, and let's see, the flash numbers came in at 56. They were expecting, the previous was 59. Expecting 58.5. So coming in a bit weaker than expectations. We do get UK PMI. Their previous was 54.8. And we do have BOE today. I don't even know. But we do have BOE this morning. And then we have Canadian retail sales at 8:30 Eastern as we get into the US session. And then we do have, at the same time at 8:30, we do have Chicago Fed Index. Also at 8:30 Eastern, along with general usual number, the jobless claims. At 9:45, we do get manufacturing PMI out of the States at 9:45 Eastern. So here in Nasdaq still continue to push here. Well, not a whole lot more, but I'm seeing it's not like as if we're backing off. And Honey says you're going to take a look at the euro. Yeah, of course. Hold on. So we are getting a little bit of a bounce here in the euro. Of course, we've seen the indices rebound, continue to rebound. So it's going to take a little bit of the bid out of the dollar. We were looking for 1676 for our support yesterday. The low yesterday was looking at 1683. And a little bit lower low today. Today's low was 1682. Let's see here. Yeah, 1683. So I still like that 1676. We just remember we went with just the bodies. I wasn't sure, and that gave us the 1676. And I said, hey, I don't know how much further is going to push down. Certainly vulnerable. Just go with the technicals, and that was it. So I'm going to stick with that, and then on the upside, you can say right here, once again, you see what to go with the bodies right there. And that's 1725, which if you look here on the high, 1723. But how much further this thing can go, or where the key level, I believe, would be considered. It really isn't there. Yeah, that would be it. $17.50. So this is will be the key area. I mean, there's going to be some resistance here at 25, which of course the high was 23, actually 23.8, 23.5. But, and you can probably dip a little bit above that, but the real resistance is going to come at 17.50. Obviously still bearish. Take a look at the cable. We had 35.66. Now this is a toughie, because if it was, we'd already fallen. Look how much we fell. Look at that. 1, 2, 3, like pretty good falls. So I wasn't sure how much it was going to push, and that's what I'm saying is we said, okay, let's go with this level down here. If it's just going to go in and break, it actually held up pretty well. But that, once again, we're pretty oversold. So if you go with just the body, and I thought that was just too close for yesterday, but the body is 3604. So it goes to 3604. Of course, we put these, I wouldn't say they were more exaggerated in the highs and lows, but you had to take into consideration as we went into FOMC. So it'd be 3604. Upside. Is going to be that body right there. That would be 36. It's right there. 36.98. Moving into the Aussie. And I thought this was vulnerable, even though I hadn't followed it this much. But remember, we're sitting here and we kept getting all that news that electricity prices were just going bananas, and just like continue to move higher and higher. I'm like, this isn't good. And I think I meant to mention, I think I mentioned that, or I posted the story. And I was, of course, that was like a week and a half ago, and I was like, wow, what do you think about this? And I did mention the second time I posted that this seems like this should be bearish for the cable. And she mentioned she was already looking for lower prices, and you can see we did fall. I thought that was just the way those electricity prices were going bananas. Looks like we kind of hung around for a while. Eventually, they did go in and break them hard. So of course, as usual, she was spot on. Let's go and move into the Aussie dollar. Same thing here. Look at this. Not the same thing. What I'm saying is we're so overdone that it's like, I guess they're having a hard time trying to push significantly lower. So I had, in case we were to break them hard because the indices, but that didn't happen. So where's the support? Well, you can see coming across here, but we just go and say, okay, where's the wick? There you go, 72.20. That'll be the low, or what we're looking at. Now we've gotten past FOMC. And not support, resistance. This is going to be the key level again. Doesn't mean we're going to get there. You can make the case that right now it's going to be right there, 72.99. But where's the real area of resistance? It's going to be right there, the 73.28. So we just go with that. I'm moving into the dollar yen. This thing's still just sitting here going nowhere fast. 1026 remains. We did push lower here. I mean, as far as our support, once again, because of the FOMC, we had to go and allow for that. But now we kind of tightened things up. So we're back to the old, what's been working, and just stick with 920. Although we've actually seen it, that's from yesterday. We saw a pretty good rebound. So at this point, let's adjust. We'll just go with these wicks coming across. So 956. Once again, now we've gotten past FOMC. Cash dollar index. Well, remember that 957, 93.57. The high yesterday was 93.51, so they didn't quite make it beyond that. Still remains the resistance. This was in case they went beyond that. And support, I still like the 92.76, so we'll keep that. No change. Bitcoin, which is still trying to hang on and managed to, once we got past FOMC, I guess they got a little bit of a reprieve as indices did better. So good on it for that, because it was right there at the edges, right there, 40,000. We had a 40,086. What we'll do is we're just going to go with the body, and body is right there. Oh, 41,323. Upside, once again, I'm going to go with the bodies right there. Right there. Oh, it is going to be 45,175. Not sure if it'll make it up there, but of course it's still bearish. And let's go move into the spoos. So you can get a little bit of a pause here. We talked about this. This is a pretty big area right here. Let's open this up. We'll open all the way because it kind of loses its perspective. At least the way I see it. Get it too open. There we go. So you can see that this was key initially, but you see how we tapped against it the first time? And I like looking at the 2-hour chart because you get a lot more opportunities versus a 4-hour chart, but it's still long enough where you can get a kind of good lay of the land. This was key, and then you can see how they tagged it here on this wick, came back down. See right here, we got above it, we closed down here, and we started working higher. So, but the significant area here is 44.16. But just like the Nasdaq, this is key here. But where can we push to? I think this 44.34. Although I think with the Nasdaq, you can push even higher. I think I want to get rid of this one. What I want to do is just a breakout. And I want to move this because look, this is the pivot. See right there, and that's huge because that's a medium-legged doji, but we'd already dipped. So I will say that we dipped because I was going to say generally with a medium-legged doji, what's been the prevailing trend? Because you usually get a counter move from the prevailing trend here, but we'd already dipped back here. But of course, once again, it's FOMC. So what I would do then is move this, and I want to go with the pivot right there. Actually, right there. And that will be 43.84. Before 16. And here's a stretcher area here, right there. It's 44.34. Concern is that we're going to pause here. Not concerned. I'm not bullish. I mean, I'm not trading it, and I just prefer just to trade the Nasdaq. Get to know one market really well. Not that guarantees anything, but you get more used to the movements, and plus, they're just composed of different stuff. Sometimes, on some days, I'll see this S&P's leading. Next day, I'm seeing the Nasdaq leading. Still key to look. I think obviously both of them, but once we get past that, I really don't try not to pay much attention to it. But we may come here, then we kind of like take a respite, come back. But where can we push to? Even though this is key, this 44.84, you can see right there, pretty key right there. I think that the real war would come in right here, where we might kind of pull back, and then we take one stab up here, and then here's where the real battle is, right there. I believe. Could be wrong, but that's what I think. This would not be good here. Have to have it right. There, which would encompass this area, you see, so that's key. And there. So, I like some resistance here at 44.16. You can see that's key. But where can we still extend this to? We can still extend it up here. I'm going to go with this 44.34, thinking that they can make one more leg and stretch up here. So considering where we're at right now, I want to go with 44.34. There's some resistance here. I'm going to push it up to 44.34. Support. We'll go with 43.96. Okay, now let's go move into the Nasdaq. And we talked about this key area right here, so you can see they're struggling a little bit. Take a look at the daily. It's got 274 here, so maybe we'll make it that one more extra little push before we run into some selling. But to me, this is where it can get to. I think this equates to the same way that it's 44.34 for the SPOOs. 354. And there's 326 here. See, I think that's the same way I've got that in pink. See here? 354, 365. This is where they could stretch to. Actually, this should be a little bit lower because you have to go with that close. At least that's where I see it. 357. This is key, this area here. So what we could do is we could end up pushing and getting up here to 82. And then how much further? Because this squeeze the same way the spruce can. We can stretch it here. And once again, I think if we come up into this area here, that's when you can see the market say, whoa, we've pushed away. Now we'll take a pause. Because once again, you're coming out of this FOMC. There can be people that are short and you could end up squeezing them. You get past this 50% and you just take it another leg up in here. Then you could say, wow, this is an area where they'll definitely pause. So let's go 15,286 slash 357. Support, we'll just keep it simple, 15,145. Because I think it's key as you're coming out of this FOMC is it and let's take a look at gold. We were giving it the benefit of the doubt. Market got to 1789. We said potential could stretch all the way up to this price. It made a pretty decent rebound, but now let's go with the bodies. Well, that looks pretty crappy. 1775. Look, things are back to normal, I guess you want to call it. Downside 1752, no change. Crude oil today is what? Oh my God, I should have already rolled this over to November. So hang on, that was my bad. Okay. It's trading pretty solid. So we're going to come right here against this body. $72.68. And support. Thing looking pretty doggone firm. I don't want to put it that far away, but we'll take a look at the 2-hour chart. All right. $71.68. Okay, there we have it. There's the bias chart. I'll get that posted. And thanks for joining us here in the European crossover webinar.